Hello, this is Cryptolyze. I hope you are well. This Wednesday, 25 October 2023, we are together today to talk about Near Crypto, Near Protocol. As usual, we will dissect this video into two parts. A fundamental part, we will come back to what Near is, its news, and then a technical part where we will project ourselves in the short, medium, long term on purchase prices, selling prices, and that starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. Near Protocol is a blockchain that was born with the desire to be an Ethereum killer. Originally, it was the whole wave at a given moment of creation of Layer 1, where we had Ethereum, which was globally saturated. We had an emergence of decentralized finance, and we needed protocols to be able to build and continue to develop the decentralized finance, something which ran out of steam with, in particular, the breakdown of the bull run at the end of 2021, and we ended up with a Near Protocol which didn't really know what to be, because we had a solution which was rather good, which had a desire to be Layer 0, but at the same time a Layer 1, with a scalability solution that was pretty good. And they rebranded all that a little bit, running 2022, finally the end of 2022, especially 2023. By defining Near Protocol as being the OS for the open web, generally the operating system for everything that is blockchain, everything that is Web 3, with a desire to provide an ease of creation. Component creation, ecosystem creation, community creation, and through application distribution. The principle, if I had to schematize it, is to imagine Apple at the launch of the iPhone. That's kind of what they're trying to do again. That is to say that when we had the first representation of iPhone, I told you that one place was going to bring together all the applications. This is exactly what they are trying to sell right now. When you look at what they are producing, it looks like this, for example, on Mantle, in which they have integrated a number of applications, in which I have no need to go directly to each of the sites. All I have to do is collect my wallet and directly access each of the applications. It's really this idea. They're also trying to do it on Polygon ZKVM. They've done it on quite a few other things. But it was not enough. And I think that was essential. It was a first step, but it is not enough. And they are in the process of changing things with their site, which still has at times changed. And yes, it is still evolving quite a bit. I think that they are really looking for themselves, or at least looking for the marketing that goes well for the next bull run that is obvious. And we see that they are in pushing on the ease of development around Near, but not at the level of Near the blockchain, but at the level of their operating system. And that's very interesting because they are therefore reinforcing this notion of BOS, blockchain operating system, in which they make available a set of components, in which there are approximately 12,276 Web3 components. So clearly I think that we are much less in terms of really usable components, and that is to make available lots of components which define a general library. To be able to create, behind decentralized applications, that distribute directly to a set of blockchains. I think this is where they are moving towards a notion of an operating system, a notion of a library to be able to develop on a multitude of blockchains and to be able to distribute on each of these blockchains. Are they going to be able to do it? That is the big question that we will have to ask ourselves, that we will have to follow. In any case, the project is being restructured. It's been since 2022-2023. In any case, it's been 2 years of restructuring to be able to offer something that is different from what we find at the level of other blockchains. And I find that this effort is already interesting and allows us to show that, yes, we are trying to change things and we are trying to adapt. The best example of adaptation is clearly Polygon. Polygon, as a reminder, initially it was a plasma, it became a sidechain. It then became a ZK EVM, and then became a Layer 2 ZK EVM ZK Validium. You can see the evolution a little. And yet we are in an elite form at the level of Polygon and Matic, because it is the ability to adapt, and I think that Near tries to do a little bit of the same thing. To adapt to the evolution of the market, the evolution of technology, to be able to offer something on what they already have, and while trying to bring value to the ecosystem, and that is rather positive, see whether or not their final solution is going to be really interesting for the entire ecosystem. and above all, promote the mass adoption and use of NIR and the use of blockchain in general. We are going to finish in the technical part, in the fundamental part. We attack the technical part precisely, in which technically we have something which is relatively clean, with an Elliotist theme which ended here in January 2022, with acceleration of the first Elliotist wave, retracement of wave 2, wave 3, 4, 5, to end on the last wave, with an end to the bull run which was at a time when, precisely, the market was in progress. To collapse, or in any case was, recovering from a big drop, we had a NIR protocol which made a new 88th, therefore which also showed a strength at the level of the ecosystem for being able to mark an 88th. While all cryptos and in particular BTC were collapsing, the entire macro was collapsing. At a time when the macro was hyper-correlated to the whole cryptos, we recall that this was really the approach. Then we had a classic retracement in 2 stages, A, retracement B, and then C. So first time, second deceleration time, to arrive precisely in the spot zone, which is a representation of the accumulation. On this you will tell me accumulation, and yes, because we are in the sign of weakness. For those who don't know the sign of weakness, it's the lower part of a wick-off distribution. There's the Discord in description if you're interested. There's lots of documentation on it, lots of people who are there to answer you if you ever have any questions. But we clearly have a distribution in buying climax, automatic rally, secondary test, and then we go, where? We sink into the sign of weakness to do the accumulation of wick-off to go back and do a new 88th, do a UTAD. In any case, that's what we expect from this type of pattern. In this bearish breakout, in this sign of weakness, we have here a compression which is very strong. We can see it clearly here, this pattern in which we have a bearish breakout. We very well have here a bullish acceleration. And since then, we are in a form of dilution with a compression of liquidity. A compression of volumes, which is rather classic of this type of pattern, and therefore what is interesting to see is that we made the first bearish acceleration. The second bearish acceleration, for me it is not sufficient. I think we should go back there. I will explain to you why. So here we are, just going to zoom in to quickly give you my view of this bullish acceleration. It is not sufficient. Clearly, we have not managed to break this level. That is a level which is very important. We should have broken it to consolidate above to have something that was rather bullish. I would have waited for that to tell myself that potentially we were going to look for something else, and we would have clearly looked for a bearish retest. And for me, the retest bearish, it can be found here. That's really the notion of a classic bearish retest that we can have. In fact, I'm going to tag it that way so that we can find it. At least if we retouch here, it implies that we are going to have a bearish continuity. If we have a wick in which we close below, we will have a bearish retest to at least retest the $1, or potentially retest even a little bit below. Remember that we have a target which is at $0.9 for a real short-term bearish acceleration and then to start again. So here we would have a button to restart the decline. On the other hand, if we consolidate above, that is to say we exceed, we close above. We close once again above and we manage to make a small break-off structure. There we will have a sign of reversal, and therefore there we will be able to project ourselves on elements which would be much more bullish, in particular on a bullish acceleration in which we would seek levels. Key, and we'll go look right away. First key level for me, it will indeed be this broken retest zone above to start again and consolidate our breaks here of $1.6. $1.6, which is what? Which is the return at the SEC level, this red candle there. It is Gary Gensler's announcement on all cryptos and all altcoins that these are securities. So obviously we have to go back to the top to be able to validate a pattern too. Once we return above this level, we will have the second target, which will be the 2.8, in which we have a lot of people who are currently blocked at the NIR protocol level. So here we will have to make an exposure control because we will certainly have a sell-off game, and then we will look for much higher targets like here the real chest. Structure in the area of $6, $6.20. And then we are relatively free. We are going to go and retest the ST here to potentially do a new 88th. So it's a bit of the dynamic that we have on a bull run. Obviously, it's on the establishment of a bull run, the end of a bull run, the arrival of liquidity. And behind that, we have a NIR protocol ecosystem that is developing and continuing to grow with real utility behind their operating system, which is being put in place. We could then project ourselves onto a wave 1, wave 2, Elliotist, therefore the notion of fractality. So this wave 1 was broken down into 5 waves EGTX of impulse. So there we would have a wave 3, which would be identical, with targets behind which would seek the 1.618 Fibonacci extension to get the $33, $34. On the other hand, That implies that there are a lot of things to do to get to that level. Agree, I think that on this type of assets it will be important to control its exposure when we arrive in the vicinity of $12-16. Why? Because the people who have accumulated in this part overall have already made a X10, X12, X13, X14. Clearly, there will be a profit taking which will be very significant, and therefore at that moment, we will have to imperatively control our exposure to take profits and assume if we never make new ATH, because this is also a possibility. As long as we have not started the bull run, as long as we have not seen the narrative of the bull run in question, as long as we have not seen the positioning of NIR and its ecosystem in all of this, at this point, it is complicated to determine whether or not we will be able to break a new ATH. I hope you like this video. If so, don't forget to leave me a like and a comment, and we'll see you tomorrow at 7 p.m. for the daily.